where's the stock market headed for here, given all this treasury drama, right? Well, I think we're going to remain rather elevated when it comes to how investors are feeling bearishness over the next 6 months. I think we're going to still remain well above the current where we should usually be at, because usually you should have about a little over 30% of investors bearish on the market the next 6 months. Since this is all going on, I think it's going to give bears enough comfort to kind of stay bearish right now and stay, you know what, I don't trust this market, I don't trust what's going on here, I'm staying bearish, right? And so I think we'll stay higher than normal in regards to people feeling bearish, right? Which actually gives me some more comfort, because I feel the more people that are bearish, the more comfortable I actually feel in the market. When everybody seems like everybody's bullish on the market and you start to see this number go to a 50%, 60% number, usually watch out. That means something bad's about to come, because it seems like you got every single person that could be bullish, right? And if you go back to the end of last year into the beginning of this year, that's exactly how it seemed. It seemed like every single person that could possibly be bullish on this dang planet was bullish, right? And then things changed rather quickly, right? And we started a downfall in February, and obviously March and April got pretty crazy, right? Now, here's a fascinating thing. And I brought this out actually on the reaction channel on a video a few days ago, right? But I think I was reacting to Katie Stockton talking about downside of the market, right? And she was talking about these technical indicators and this and that, right? And I said, you know what? These technical indicators, all it would take, and I point this out, I said, all it would take is the market to go down a bit, right? Let's say, you know, in the video, I think I said the S&P 500 to go down 2 to 4%, has a pullback, right? That pullback then gets bought up, and all of a sudden technicals all go bullish. And everybody's saying, oh, the 200-day is blah, 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 and all of a sudden, you know, all the technicals go bullish again. And so if this market starts to bounce next week, dude, like, people are going to go crazy bullish again, because they're going to be like, oh my gosh, we've had all this drama, we had a bad auction, right? You know, this and that's happened, and at the end of the day, the market just ends up going higher and higher and higher, right? And then everybody's gonna be talking about we're breaking through all-time highs, and how high are we gonna go from there? And additionally, remember, big dog's about to report. Wednesday, May 28th, they're reporting. And so this whole, everybody talking about the auction, that's gonna be gone in a few days from now. Literally, it's gonna be gone in a few days from now, because then everybody's gonna move on to NVIDIA. And what are NVIDIA numbers? What's the guidance like? Because we do know NVIDIA and all those big tech companies are really what drives the stock market forward or doesn't. And so the focus is about to go over to NVIDIA, regardless of this whole auction situation. And so, you know, as they say, the report of my death has been greatly exaggerated, right? You know, people trying to report the death of the stock market here today, right? And we're going to go back down to new lows on the S&P 500, on the NASDAQ, on the Russell 2000, on the Dow 30. You know, it's always possible, but, you know, just keep in mind, there's already a lot of people bearish. And, you know, this, what happened today is not enough. This is not a black swan event. This is not enough to crash the market, right? It's enough to cause people to say, woo. It's enough to cause people that are buyers to say, do I want to buy as heavy as I'm thinking about buying? It's enough to cause the bears to say, you know what? I'm going to remain bearish. I don't want to go bullish right now, right? But that's all it is. It's not enough to say, for all the investors, all the bulls to say, oh my gosh, we're getting out of the market. And it's not, you know, it's not enough for the bears really to say, you know what, we got enough here to go crazy shorting. It's kind of like just it's like a warning shot, I guess you can say. And everybody's like, okay, what's going to happen here? Are we going to get more than a warning shot? We don't know. We just have to let time play out here, right? Now, in terms of me, I thought seriously about hedging today. Did I do it? And what did I, you know, potentially do or not do here? So this situation definitely got me to think, like, do I want to hedge a little bit my portfolio? And when I hedge, I usually buy put options on certain stocks that I think could fall some of the most during that particular time. And what I came to is, no, I don't want to hedge right now. And a couple of reasons. One is I still actually have a pretty good amount of cash, a pretty good cash buffer. And when you have some good cash around, that's kind of another way of hedging, right? So it's not like I'm in a cash short situation where I'm cash strapped or something like that. I'm pretty good as far as that goes. So I already kind of have that hedge on. Secondly, we already have just still so many people bearish on the market that I don't love to make bets against the market when it seems like there's still just an overwhelmingly huge amount of people bearish. Additionally, I was trying to think, like, what would I even want to bet against right now, right? And I'm looking out there and I'm like, I don't know, like, if I really want to bet, like, I thought about like Tesla, for instance, but I'm like, you know, we still got the whole robo-taxi stuff happening in June, and like people are going to be hyped off that. And so, you know, that stock might eventually have a big downfall where the stock goes down quite significantly. But I'm like, you know, if you get in it too soon and then the stock rolls 20% between now and, you know, whenever the first robo-taxi is out there in the market, that wouldn't be good, you know, because 20% move up in the stock or even a 15% move up in the stock would be devastating. Your put options are going to expire completely worthless, right? And so then I was thinking about like Palantir. Palantir is still a tough one to bet against right now, and the reason being, and obviously I'm Palantir shareholders, still a tough one to bet against because the revenue growth rates are still accelerating, right? And additionally, you get these deals that just come out. If I recall, there's another deal that just came out with Palantir after the bell that was like a huge multi-$100 million contract. And it's like just deals keep rolling. And so it's tough to go against that momentum. And then I thought about like Costco again, because I bet against Costco and Walmart at the beginning of this year, and that did me very well. But I don't know if I'm ready to go back against those again. I might eventually, but I don't know if I want to do it right now. And then I thought about like the big techs. I really don't want to bet against the big techs, even Apple, right? You know, I don't really want to bet against them right now because at the end of the day, like people just religiously buy those stocks, and the funds buy those stocks, and you know the retirees buy those stocks. Or no, I shouldn't say the retirees buy those stocks. The people that are saving toward retirement all buy those stocks, even without even knowing it through their 401ks and things like that, and their workplace plans. So I just looked out there, and FICO was one that was actually interesting to me as one to bet against, right? But FICO was down huge today. It was already down like 15%. So I'm like, you know, I don't want to say all the downsides mitigated in FICO. Maybe it has some more downside, but that was a lot off the table. Stocks like Whirlpool and RH, some of those housing-related stocks are already so beaten down. I'm like, do I really want to bet against those ones with how bad they're already beaten down? I'm like, maybe there's some more juice to squeeze in those lemons, but I don't know how much more to squeeze. And so even those ones, I'm like, I don't know about betting against those, right? The home builders have already gone down pretty significantly. Toll even though they reaffirmed guidance, like they finished red today. You know, if that one was up big today, maybe that would have made one. So at the end of the day, I just couldn't do it. Couldn't do it, man. And so we'll see what happens. At the end of the day, if the market runs heavy this summer and going into the fall, you know, expect me to eventually do some hedges. Expect me to start buying some puts out there. But we got to let time play out, man.
How would you like access to all my best course curriculums? My Becoming Master of the Stock Market course, my Stock Market Investing Mastery course, my Stock Options Mastery course, my Millionaire Playbook. How would you like access to all my best courses, as well as the ability to have access to my 6 and 7 figure plus Discord community, where we're constantly keeping in touch with each other, talking about what's going on in the market? How would you like exclusive weekly videos from me? How would you like the ability to see what stocks I'm buying and selling in my $2 million plus Fidelity account? If that all sounds pretty interesting to you, apply to join my private group. That is going to be linked in the description area down there. You can click on that, fill out an application, and go ahead, hop on a call with Andre. Andre will walk you through the whole process. He'll walk you through the whole group, and you can go ahead and join us in there. Once again, the link for that is in the description area.
All right, Jamie Dimon, let's listen to him.
What did you learn in the last month?
Not much, other than we have all this uncertainty. You know, some preceded the new administration, like we had large deficits, interest rates going up, inflation going up, and some are, you know, tariffs and things. And of course, the geopolitical situation is very tense, very difficult, and hard to resolve.
Okay, so if you forget projections, numbers, what's your hunch? Is the U.S. going to go into recession or not?
Look, I'm going to defer to economists who give it about a 50% chance. I think all these things are probably inflationary a little bit more and slowing down the economy. If there's a recession, I don't know how big it'll be or how long it'll last. Hopefully we'll avoid it, but I wouldn't take it off the table at this point.
If you look at, you know, the trade war and then the somewhat reconciliation between the U.S. and China, does it hold?
I think it's the right.
Before we go further here, it's important I mention this, right? Because Jamie Dimon always says, hey, don't take recession off the table. Talks about economists, 50-50, coin flip, and those sorts of things. Keep in mind, Jamie Dimon in recent years has been definitely on the cautious side. And I think that's kind of a prudent take for the individual that runs the most important financial institution in the world, right? Like, I'd rather have a man like that that's in charge of the most important financial institution in the world be more cautious, and kind of like from that point of view, then everything's rosy and it's we're going to the moon type philosophy, right? It makes me feel more comfortable.
What to do is to back off of some of that stuff, to have an engaged conversation. I'm grateful they did the U.S.-UK deal. It's an agreement in principle, so there's a lot of uncertainty still, and there's a lot of uncertainty still in the China thing. But at least we started. It obviously calms down the markets. That's not the reason to do it, but the markets, do vote or something like that, and so you'll still have uncertainty to resolve. There's 90-day triggers in a lot of these things, and hopefully they will be resolved. But they're complex. I don't expect immediate resolution, to the satisfaction of everybody in 90 days.
But do you expect markets to settle from here because we have a little bit more of a blueprint, or could volatility pick back up at any second?
Markets are quite unpredictable. I think there's a lot of uncertainty out there that you can't discount. War in Ukraine, terror in the Middle East, Iran, huge deficits, our tax bill, which I would like to see a good tax bill pass, the tariffs, the reaction of countries to tariffs. The EU and the UK are about to negotiate. I think they have a chance to actually develop a great relationship, partially making up for, the disaster that Brexit became. And those are uncertainties. You can't eliminate them because you want to.
But what are your biggest clients saying about this market volatility? Have they made money on the back of it?
Yeah, some do and some don't, and volatility could be good or bad depending on who's facing it. So, but I would expect continued volatility. I think it's a mistake to think we can go through all the things we're going through and the volatility itself will calm down.
Has it been good for?
Boom. Hit the nail on the head, and that's exactly what I was saying. Especially under this Trump presidency, it's going to be a lot of volatility. Told people that on inauguration day, it's going to be a lot of volatility. There's going to be a lot of moments that you're feeling like, gosh, can I ever make money in this market? And there's going to be a lot of moments where you're figuring out, how fast is the car I'm going to buy? It's just, that's the sort of market you're going to be in, right? 1 minute you're going to think about, I'm going to retire next year, and you're going to be thinking, next minute you're going to be thinking like, maybe I'll retire in 50 years from now. Like that's the sort of market we're in, right? 1 minute you're going to be thinking about, hey, I'm going to take a month-long vacation, and the next minute you're going to think about, oh, maybe I'll take a 3-day vacation to Disneyland instead.
JP Morgan, what's your, trading revenue looking like?
Yes, because when there's volatility, this is a very simplistic way to look at it. Spreads gap out, and traders make more money if there's more volume. So we had both this time, more volatility, more volume. But very often when you have a lot of volatility and spreads gap out, there's much less volume. So you've seen examples where there's good volatility and there's bad volatility. This one happened to be good. The next go around may not be so good.
Jamie, when it comes to financials, I mean, a lot of, I guess, non-bank entrants are making quite a lot of way. Citadel, Jane Street. Is that a concern for the banks? Should it be a problem for the banks?
I wouldn't call it a problem. They're both clients and very capable. But I've always had the view there are a lot of competitors out there, and all the major banks are back. I think that's a good thing for the world. Maybe not so much for JP Morgan. You mentioned those two. There's Apollo. There's a lot of fintechs, some very good ones. There's Stripe. There's PayPal. Yeah, my view has always been the same. I tell the management team, assume competition. Assume they're coming at you in every angle. Assume they often have their own strengths, sometimes their own weaknesses. They won't all do great, but yeah, I think they're, some of these people are gaining quite a bit of share in parts of their business. We still are too, by the way. So, we're in the fight. We're not losing out very much, but that doesn't mean you won't lose out tomorrow because you're winning today.
So what do you have to do today? How do you see the people that are doing, well today doing even better tomorrow?
Are you talking about us or other people?
Both.
It's quality people. You interviewed Pranav. I mean, we have exceptional people in investment banking and sales and trading. And I put right next to that technology, but it's related because those people deploying technology. So there are thousands of technology projects, and then there are hundreds of AI projects, all of which are meant to do a better job for customers, consumer, research, how we deliver things to people. And if you don't move, you're going to be left behind. I mean, I remind you could be a country or a company. You do not have a divine right to success. You know, we mentioned this management learning things I did. You can see it on YouTube and all that. But I point out to people, look at Nokia, BlackBerry, Sears, Kmart, Bear Stearns, Lehman. I can chapter up diverse of failed companies, usually because they're complacent, arrogant. They think they're, the top of the world, and they're not. There are competitors coming everywhere, and you should assume that's going to be true.
Do you see competitors coming for the U.S.?
Yeah.
Where? Europe?
Oh, you're talking about the countries?
The countries, yeah.
Yeah, I think Europe. Let me just say this. I think Keir Starmer, Merz, and Macron. I think Macron is one of the best political leaders on the planet today, okay? I think Keir Starmer is smart, devoted. They're saying the right things public and privately. All of them talk about growing the economies. Thank God. Pro-business, pro-capital. And they're doing all of that to improve the lot of their citizens. It's not about what they're doing for J.P. Morgan. And if I was Europe, absolutely, I'd want to greatly live in the UK, military, economic, and I would reform as best I can all of European things, what they're all talking about now, deregulation, simplification. And yeah, they try to compete with America. And that would be good for America. That doesn't make me sad. It makes me happy that they're strong. And then, they're allies. I want our allies to be strong and powerful militarily and economically.
But do you worry about U.S. supremacy, actually? Exceptionalism?
Yeah, I never believe we're quite that exceptional. I mean, remember, America's an unbelievable country with freedoms and the gifts of God and, water, food, energy, and then the gifts of the founding fathers called freedom of religion, freedom of speech, freedom of enterprise. Those dwarf everything. And so we still have the most prosperous economy the world's ever seen, but the Americans shouldn't take it as a divine right to succeed either. We've slowed ourselves down with regulations, stupid bureaucracy. We haven't done budgets in years, so no, we shouldn't assume it's forever. I don't think we'll still be preeminent, militarily and economically for a long time, but if we don't do everything right, we could lose that too, 20, 30, 40 years from now. And I think very important that America, the goal of America should be to help the military alliances of the Western world and to help the economic alliance of the Western world to walk side by side like you did in Victory in Europe Day the other day here, to strengthen the Western world and hold it together, not to cause it to fragment. And so I think we have to work hard to make sure that's the case.
Do you worry about the deficits, and do you worry actually in the U.S., and do you worry also about the U.S. dollar remaining as a reserve currency? Do you think Europe has what it takes to try and put the euro in there?
Yeah, so I should have mentioned deficits up front as being one of the issues you have to deal with. And I think asset prices are quite high too, and those create various risks for America. Our deficit is almost $2 trillion, 6 or 7% of GDP, the largest peacetime deficit ever, and we have 100% debt to GDP. That 100% debt to GDP is kind of universal, almost around Europe on average, but your deficits are much smaller. Does that create a risk? Absolutely. It creates a risk of inflation to me. It creates a risk of higher long-term rates. But America, will the dollar get weak? I don't know. That's a slightly different thing. I think you could see rates go up, the long bond rates go up, and that might slow down the growth, and that's how we kind of a stagflation kind of scenario.
What do you tell? I mean, you must see President Trump regularly. What do you tell? What would you tell him?
I talked to all of the folks there. I wrote about my chairman's letter. I mean, first of all, America should worry about things we can do better. I call it blue tape. I mean, we are out of control. We're doing the same stuff that they did here that, virtually, the American public may not know. The GDP per person in Europe has gone from something like 90% of Americans to 65%. And they did it to themselves. Rules, regulations, overcomplication. They started the European Union, which I think is a huge accomplishment of mankind. They got to finish it. And here they call it the Capital Markets Union, the Banking Union. They have to create a big common market of 450 million people. And so in America, it's the same thing. It's regulations, it's permitting. We've wasted a lot of money in the green economy. It's getting jobs back. It's training in schools. It's fixing immigration. So we've stopped at the border, but now we have to have a more merit-based immigration, more seasonal immigration, things that can help the country grow. And then we have to work on our military alliances, on our economic alliances, and that's for the sake of the future free and democratic world.
But so on the
This is one thing that bothers me about Trump that I think he's making a little bit of a mistake on is he spends all his time meeting with, Elon Musk, and Zuckerberg's gone to the White House several times, and these sorts of individuals, right? And he's always worried about what Tim Cook's doing and all this sorts of stuff. From my understanding, he has not met with Powell once since he took office, right? Hasn't met with Powell once. Jamie Dimon just said we never even speak. You got to speak to your money dudes. These are the money guys. They're very important to speak to. If I could argue they're actually much more important for him to speak to than Zuckerberg or Musk or any of these, great technology folks. You got to talk to the money guys because they know a lot more than Trump. Okay, I'll just be honest with you, especially Jamie Dimon. If you want to tell me who knows more about money, Jamie Dimon or Trump, Jamie Dimon every day of the week. And so he needs to be having high-level discussions about where bonds are going, Jamie Dimon's true opinion, off the record, when you could really get Jamie Dimon to really give his opinion. That's who he should be meeting with. He should be talking with him often because that's going to dictate where mortgage rates go, where debt rates go for companies that can take out debt. And that's all the stuff that drives the economy or doesn't drive the economy. He should be meeting with Jamie Dimon once a month. If I was he's got all the power in the world, he could easily make that happen. And he's spending his time, in my opinion, just not talking with the right type of folks. That's the type of guy you need to be really talking to, your money dudes, because that's going to tell you a lot more.
Economic alliances. Is there a concern that actually certain countries in Europe or elsewhere will choose non-U.S. bank for bond issuances? Will choose non-U.S.
Jamie Dimon knows where all the money in the world's rotating or moving, or what all the high net worth individuals are doing with their money. He controls the most powerful financial institution in the world. Dude, that's the guy you should be talking regularly with.
Asset managers to manage their pensions.
Yeah, there'll be a little of that. We irritate a lot of people. So I run into them and say, they're not buying our, Kentucky bourbon or something like that. There'll be some of that. And I think it's perfectly reasonable for, I spoke to a lot of investors here. They're thinking about the asset allocation to the United States. Will they diminish that? Possibly. Is America a bad investment destination? No. If you were to take all of your money and put it in one country, it would still be America. It's still the most prosperous nation on the planet. It's got the best military on the planet. It's got huge amounts of innovation. People are catching up. That's a good thing. China's doing some very good innovation in medical and AI, and we should assume they're continue to do that. But America's still got the best. Our GDP per person is $85,000. China's $15,000. We don't have anything to be ashamed about. We should fix our problems because we could grow a lot faster, which help all of our citizens.
But if you put out too many tariffs and actually too much uncertainty, does that not squander actually a lot of the assets that the U.S. has?
I think they're doing the right thing now, which is to back off of it. Let the Secretary of Treasury do the hard work of figuring out what's the right thing to do. If there are unfair trade things, do something about it. But they have backed off of specific things in specific industries, and I think that's the right thing to do. I think the first thing was very large, kind of that everything, everywhere, all at once, and now they're, kind of backing to where I think they should be.
In terms
but even at this level, it causes that kind of uncertainty. Even at this level, you see people holding back on investment and thinking through what they want to do. Thinking about how much you're going to put in the United States, and we're going to be okay, but it is causing that uncertainty.
We were looking at the president, of course, in the Middle East, where there were deals that were signed, and a lot of Wall Street, some of your competitors there. What's your strategy for the Middle East? How much do you want to grow there?
Well, we grow everywhere. We go country by country. And we look at, we bank countries, cities, schools, states, hospitals, big companies everywhere. We have a network effect. So when we bank Bloomberg, we're banking in the United States, we're banking you in London, we're in Paris, we're banking you in Europe, we're banking you in the Middle East. That's what we do. So almost every one of those countries, we're growing. As they grow, we grow. We cover, more of their institutions. Overseas, we're institutional. In the United States, we also have consumer. And so, as you know, we're testing consumer in Chase UK.
Yeah, and you're growing, actually, that retail business a lot in the UK. What's next for that?
We hope to grow it more in the UK, add some products, and eventually we've already announced we're going to go to Germany. But I think we have a chance to build a great digital bank, and we have competitive advantages.
Build a great digital bank. You heard Jamie Dimon just said that, right? it's clear that's where everything's moving, right? And that's why SoFi remains very well positioned.
We have a brand, we have research, we have a balance sheet, we got capabilities. We're going to add, we're not going to announce it today. We're going to add more capabilities over time, so that, and then someone like you, if you travel to the United States and to the UK, you're going to be able to move your money between Chase US and Chase UK on your phone. So we're going to add things that make your life better as a consumer of our banking product.
You certainly caused some waves in talking about return to the office. I think there might have been a little bit of swearing.
I emoted a little bit, yeah.
In there, or not? Have people listened?
Yeah.
Has your staff come back full time?
Listen, first of all, I did emote there. And I emote, people know me, and I don't really care about that. I don't worry about it. But I want to answer the guy asked a legitimate question. And I gave it a very detailed answer about why it doesn't work for young people, why it doesn't work for management, why it doesn't work for innovation. I completely applaud your right to not to want to go to the office every day. But you're not going to tell JP Morgan what to do. And I think we already have 10% of jobs at home. I'm not against work from home. I'm against work from home. It doesn't work. And then, of course, the press made a big deal about the petition and all that. It was like not even a mosquito.
Okay.
Most people are back. Some people, we've had no additional attrition. We had to make some modifications. We didn't have enough seats in certain areas, and we'll be a better company. And I think our employees will be happier over time. And the younger people learn the right way. It's an apprenticeship system, and you can't learn working from your basement.
You can't learn working from your basement. That's funny. Yeah, and JP Morgan, they have their new beautiful building. Should be open now, I believe. If it's not open yet, it should be opening very soon. I actually walked by it a couple times when we were in New York City last summer. Beautiful new building they're building there, right? But what's my takeaway from what I just watched there with Jamie Dimon? Things are okay. He's still cautious. He's not scared. And overall, that's actually a win in this environment. For somebody like Jamie Dimon to just be cautious and he doesn't sound scared about anything, that's a win. That's actually pretty comforting, if anything, right? And like I said, that man sees as much money, if not more money, where it's flowing throughout the world than honestly just about anybody, more than even the Federal Reserve, right? He's got levels of granular data that he can look at that's even deeper than the Federal Reserve can look at. It's absolutely unbelievable, right?